Hello everyone, George DeSantis here with the Look at the Market. This is an abbreviated look being done in the middle of the week on January 24th, but it will provide us with data up to January 23rd. So I'm going to read the disclaimer first, and then we'll get to look at the charts. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. Consult a licensed professional investment advisor for investment advice. I am not an investment advisor. Let's begin by looking at some charts at the monthly chart of the S&P 500. So we'll take a quick look at the monthly chart of the S&P 500. It moves very slowly, of course, because each bar represents a month's data. So it's like a big battleship, as I often say. Now, the trend is up. You can see that the Kalman filter, the yellow line, is above the instantaneous trend line. So that tells us trend is up. And there is no indication for reversal of the trend because these bars, and especially the most recent bar for this current month, this bar is above the parabolic yellow dot. So there is no indication to reverse that uptrend. MACD is continuing to trend up. It's now above the zero line at 7.47. So that's confirming the uptrend. And also Elder Force is in positive territory above the zero line, and it even broke this downtrend line here. So the longer term trend, I should say, is up. Let's take a look at the weekly chart. And here's the weekly chart of the S&P 500. Let's look at here. First thing to note is that the Kalman filter yellow line is above this green line, and that's indicating that the trend is up. Of course, it's now extended above the instantaneous trend line. As we can see back here, whenever price is extended above the instantaneous trend line, it tends to regress. One might think of it as regression to the mean. In this case, the instantaneous trend line. It happened here again, and it is likely to happen here again. Recently been getting an email from Alex Elder, and he's been finding many more bearish divergences of MACD than bullish divergences, and he's expecting a pullback also. So we might get a regression to the mean here. How far back, we don't know. The first support is 2200, and we can see that's pretty much close to the instantaneous trend line. On the other hand, parabolic is still below the most recent bar. What we can see here is that there is a triangle. If we plotted a line here and here, we can see that there is a symmetrical triangle, as it's called, at the top of a nice uptrend. And a symmetrical triangle at that point at the top of an uptrend is usually a continuation pattern. Now, we will see how that develops. But the weekly trend is still up, although we might look for a regression to the mean or pullback. Percent R, since it bounced off the 50% line, is still above the 80% line, indicating that momentum is still pretty strong for this uptrend. And RSI 12 also bumps off the 40% line and is continuing to remain above 60%. So generally, these two indicators are confirming the uptrend. We had a minor divergence here. It's a bearish divergence of MACD. As we made a high and higher high, MACD made a high but a lower high. So we've had a bearish divergence. It hasn't materialized as yet, but that doesn't mean that it wouldn't do so. So we have to keep our eyes out. We have to be careful not to get too bullish here. If we have stocks, you might want to consider using stop loss orders or keeping a real close eye on those stocks. And let's take a look at another chart, a daily chart. So here's a daily chart of S&P 500, and There are a number of indicators on this. I'll point them out here. The Bollinger Bands are represented by these dotted lines, and we can clearly see that there's a squeeze, a narrowing of the Bollinger Bands. When this happens, most likely we get a breakout, but we don't know what the direction of that breakout would be. It could be up or down. However, this data here, this bar, is as of Monday. And today's bar, we went up to 2280. So that may be an indication that this market is breaking to the upside. We need to get some more confirmation of that. But as of today, Tuesday, we do have a close close to the 2280 level here. So we need to keep that in mind. Now the parabolic is still below the most recent bar, so no indication to reverse this uptrend to a downtrend. In addition to that, the instantaneous trend line, that yellow line, is still above the blue line, which is the instantaneous trend line. So the trend is up according to this MESA indicator, the relationship between the Kalman filter and the instantaneous trend line. So we have moved up today, but we don't have that data showing here. Remember, I'm making this video on Tuesday night, the 24th, and we only have data to the 23rd, which is this bar. See, the 23rd, right? So now, Jerry Appel's sum of the rate of change, we got a sell signal here, and since then, no indication to get back in. So MACD is still below the zero line in bearish territory, and %R is now breaking below the 80% line, but it's still way above 50%. Now, one thing we can do here, and I did it earlier for myself to see what's going on, we can get the expert indicator, and I'll drag it over here so you can read it. It says the market is currently in a cycle mode as opposed to a trend mode. This is what the MESA wizard is indicating. Hold your short position. However, watch for an imminent trade reversal to a long position signaled by the sine wave indicator. So we don't have the sine wave indicator on this chart, but this wizard is telling us watch for, as of Monday, sorry, we'll watch for a reversal to a long trend. And of course, we did get a 100-point move today back up to 2280 on the S&P. Okay, so we also had the S&P on the daily chart regress back to the 50% Fibonacci level. So it regressed back to the Fibonacci 50% regression. And since then, it bounced back up. So it seems like we are going up from here because we did have a good day today. We're just about 100 points or more. Let's take a look at something else. Here's a weekly chart of the NASDAQ composite. Some time ago, when we had this ascending triangle, this ABCD triangle, I calculated a target of 56.54 for the NASDAQ composite. Well, it got pretty close to that because the high here was 55.84. So we got pretty close to this 56.54 level. And now we are seeing a couple of dojis, small-bodied candlesticks. Perhaps one way to look at it is that we're getting, after this nice move up, we're getting a little consolidation here. Another way to describe it is certainly that there's uncertainty about the direction of the market from here on in. The parabolic is still below the most recent bar, so there's no indication to reverse this uptrend. And the most important thing is that the Kalman filter, which broke above the instantaneous trend line way back in April, is March of 2016, tested it 3 times and remains above it. So this trend is still up, and that's on the weekly chart of the NASDAQ. Now we did see a bearish divergence, new high on the MACD, new high on NASDAQ, and a lower high on MACD. However, since then, we've had MACD trending up a bit. So perhaps this divergence may not materialize in any major pullback, but that is still to be determined. So let's take a look at something else. Here's a daily chart of the NASDAQ composite. And we don't have, of course, today's data, being the 24th. We have data up to the 23rd. Today's data would take the NASDAQ further up here. So it's interesting to note the Kalman filter is still above the instantaneous trend line. Parabolic is still below the most recent price bar. No indication to reverse this uptrend yet. As far as Jerry Appel's sum of the rate of change indicator is concerned, it's been oscillating back and forth in this area here, around the 4% line. So no clear indication of what we ought to do here in terms of buying the NASDAQ, which I often trade. Now, MACD has lost some strength. So the bulls have lost some strength here. However, we wait to see whether or not we're going to get any more significant pullback toward the instantaneous trend line. As far as Elder Force is concerned, it's been trending down. So that's not a good thing to see, especially if you're bullish on this market. So again, we'll wait to see what happens from here on in. But as of today, we did get a further move up. So we get a regression here or consolidation. We got a move up today, and we wait to see how the rest of the week plays out. So let's look at something else. Let's turn to the stockcharts.com charts, which provide us with the impulse indicator, Alex Elder's impulse indicator, which paints or colors the bar green, red, or blue. And we're looking at the weekly chart of the S&P, and we can see that after this run up here in price, the S&P consolidated for a while as far as the weekly chart is concerned, and we now have a blue bar which allows us to go either long or short. We can either buy the market or sell it short. That's what this blue bar indicates. MACD is now it continues to remain in bullish territory. So as far as the impulse indicator is concerned, we are allowed to buy. And let's take a look at the daily chart. As far as the daily chart is concerned, we have a nice green bar today. In fact, we have today's data here as opposed to the other charts that were end of day data, and we only got data up to yesterday, up to Monday's data. So on this bar, we have a green bar, which allows us to buy the market here, to buy the S&P or the general market. And so this is still looking pretty bullish. Let's summarize what we've looked at. The monthly chart of the S&P is still in bullish territory. The weekly chart is still bullish. In the case of the weekly chart, we saw that there is a likelihood that we might get a pullback. On the daily chart of the S&P, we saw some consolidation, as we can see right here. But now we made a new high, and we are closing at 2280, which is about the high that we made in the last two occasions here. So the market's still looking pretty strong here. And I'm holding the stocks I have. Don't like to mention the individual stocks here, but we will do so in the email that I sent to you guys. Have a nice day, and let's hope that the market closes the week even higher.